I'm Renee Cordes with The Deal in Brussels. I'm joined today by Carol Lanoux, CEO of the Center for European Policy Studies. Thank you very much for joining us.
Hello.
As EU policymakers lay the foundation for a future banking union with a single supervisor and a system for dealing with failed lenders, how fragile do you find the banking system today?
Overall, the fragility of the banking system depends on the condition of the economy. If our economy is in depression, which it is in most member states today, also the banks are in a fairly fragile position. Because what happens if the economy is in a bad shape, there are more firms which cannot reimburse their outstanding loans, there are more non-performing loans, so banks take the hit. But we know also, secondly, that European banks overall levels of capitalization are not bad, but they are not sufficient either. They are below average levels of capitalization in the United States, for example. Hence, they are still fragile.
What are the weakest links and how would you go about fixing them?
I think the weakest links are essentially in the south of Europe, because that's where the economy is the weakest, but also where the sovereigns are the weakest. And both elements, let's say the economy in the south of Europe, plus the position of the sovereigns over there, puts banks over there, not all of them, but many of them, in a very weak position. And we've seen this particularly in Spain, but we also see it today in Portugal or in Greece, for example.
Turning our attention to the planned single resolution mechanism, the proposal from the European Commission last week wants to see the European Central Bank signaling when the lender is in trouble, and then the European Commission having the power to prepare the resolution. Is it realistic for the Commission to seek this power, in your opinion?
Unfortunately not. I don't think it's the Commission task to do this. Basically, the Commission is a regulator, is an entity which proposes regulation to the Council and to the European Parliament, which then enacted as European-wide legislation. But to decide on resolution, as the Commission proposed 2 weeks ago, is basically a task for a supervisor, meaning the Commission proposes that it will decide on the trigger when a liquidation has to start of a bank or of a financial institution. I don't think personally this is a task of a regulator, it's a task of a supervisor. What have we done over the last months now is been discussing this new single supervisory mechanism by which the European Central Bank becomes the supervisor for the large majority of banks and the large majority of member states. The ECB will, in this capacity, decide to give licenses to banks, but also withdraw the license. And that is written in the proposal of the text, which are not yet fully approved, but they're almost approved. But the moment you withdraw a license of a bank, it's the same as saying, at that moment, you have to start liquidating the bank. So I don't think it's logic to say that the Commission will then do this because of some related state aid powers and so on. No, it's a task, I think, of an institution, which is the ECB under SSM, or a related institution within the European Central Bank.
Before we have all the parts in place for a future banking union to deal with future crises, how prepared are we to deal with current crises if a big cross-border lender goes under today, tomorrow, next week? What happens?
We are already much better prepared than we were 5 years ago, because we have decided basically that the ECB will become the main supervisor, certainly for the large banks, and the large banks are the cross-border banks. However, there are still some bits and pieces which have to be decided upon. One important one is deposit guarantee schemes, where we don't have a single regime in Europe, and we have clearly seen this in the case of Cyprus, but also for resolution. Of course, we have already a resolution directive by which we say how we look at the different asset classes of a bank and which one can be kind of used more rapidly than others. But we formally do not have a single resolution mechanism. I do not think this is so much of a problem, because we have decided on the ECB, as I just explained, to be the one to decide on licenses or withdrawing the licenses, which is a big difference with the situation which we had, for example, 5 years ago. When the Belgian bank Fortis, which was a large cross-border bank, failed, the Belgians were trying to decide on themselves how to resolve the bank, with not sufficiently consulting the Dutch or the Luxembourgers, for example. Such a situation will, under this new setup, which basically will be in place in a few months, no longer happen. So we are much better prepared because we have one single supervisory authority. We don't have many different sovereign supervisors which are competing with each other, sharing or not sharing information with each other, which we now have in the ECB.
Thank you very much for joining us. For The Deal in Brussels, this is Renee Cordes.